So, how well you think your 401k is performing? You think it's going to be enough to sustain yourself once you retire or you get up in your middle age years? If you think so, there may be an alternative to that, or at least another instrument that can complement that. But first, check out how some employers feel about it.
Your thoughts on the 401k versus other alternatives out there?
Well, first we have to take care of the myths. What a 401k is, what it is not. Number one, a 401k is not a race, so it's not a marathon on a holiday. A 401k does not mean you're going to have $400 to $1,000 sitting in a retirement account. So a 401k is a tax code. And if you go to the history of it, back in the day, there were these things called pensions. The real name was defined benefit plans. That's where the saying goes, get the job, get the benefits. Very expensive to run, though. Not very cost effective. And with the baby boomers retiring, there's too many people retiring, which means there's too much money going out, not enough money coming in, which is the same issue with Social Security. So these companies in the 70s, when taxes were at a high, they said we have to come up with this whole strategy of we got to pay less, Tom. We got to pay less taxes. No, we're making too much money. I got an idea. We're going to do something for us, and we're going to sell it to the public. We're going to call it a defined contribution plan. Ooh, it sounds good. That word just sexy. Contribution plan. Here's what's going to happen. We're going to offer these accounts to our employees, and we're going to put their money into stocks and mutual funds. Charge them all these fees they have no idea about. We don't even know who's watching the account. We're just going to call these, contribution plan. We're going to put some of our money into their account for them to contribute. We write it off our books, so we pay less in tax. They just defer it. So we pay less, they take all the rest. There's no more guaranteed income, no more predictability. They take all the risk and the fees, and we just shifted the risk from us to them. That's called your 401k. So a 401k is actually a salary reduction plan for highly paid executives, not even a pension replacement. So it's my retirement. Does your 401k protect you from long? No. Does it give you long-term care? No. Does it guarantee an income? No. How's that retirement? And have you ever asked why is it the only thing they push? So it's not in the employee's best interest.
So there you have it. That's an employer's perspective. You're at a disadvantage and they're at an advantage. Well, I don't think that your 401k works out well for you. But then again, maybe it may if you're one of these investors that don't want to take the time out to do research on stocks, and or maybe you're somebody that would rather pay someone to do it on your behalf, and that's something that you honestly can do yourself. But in any event, check out this next person and their assessment on 401ks.
401ks made sense when tax rates were coming down. You get a tax deduction up here, it grows tax deferred, and you retire and you pay tax down here. But we know taxes are going to have to go up. So how much sense does it make to take money out of your check today, defer that baby till taxes go up to 50, 60%, then I'm going to take it out and pay? That doesn't make any sense. So what I tell people is say, does your company have a 401k? Yes. Does it have a match? Yes. Explain the match. Well, if I put in 4%, they match with 4%. Okay, good, I do that. That's 100% rate of return. But above the match, I wouldn't put in my 401k anymore. I would be in control. I want to have tax-free income in retirement. And that 401k and that IRA, those are going to be like chains around people's necks. They're going to regret that they put as much money in those products as they did.
Now, I think that's a great assessment that last gentleman just gave. A lot of people don't think about the fact that once you go to withdraw those funds out of your 401k, the tax bracket is going to be higher as you get older. How many people consider that one? Not only that, there's associated fees with having such account, and at the time of withdrawal, you may be out of pocket maybe 20% or more. That's something else people are not thinking. A lot of people are thinking, hey, well, it's only 2%, 1%, whatever it is. But once you have that account for a number of years, it adds up. You'll find out how much is really coming out of that account. But anyway, check out the assessment from the Wall Street Trapper.
That traditional people on Wall Street are traditional investors, 100% they don't agree with what I'm saying. They don't like it, because what happens is anytime you are awakening a people, you are also taking away the strength that the overseer has, right? So not only we are enslaved economically and like mentally we enslaved, right? There's always this thing that I like. It's a picture. If you look at it, they take a horse, and the horse been chained up for so long. So when they take been encaged for so long, they put the leash and then tie it to a chair, and the horse will stay there. And it's because the horse is so accustomed to being on that when he don't move, and that's kind of how we be. Like we so accustomed to working this long. We so accustomed to retiring at such a we so accustomed to going in and out of jobs, but that gives them security. Like I even said, like with banks, like the bank is not the best place to have your money, but we know it ain't the best place to have your money, but we've been taught that's the safest place to have our money, and we don't know where else to put the money. Just like people going to job with the 401k, that ain't the best place to do nothing, have your money, but because we don't feel like we adequate to manage our own money, we don't feel like we adequate to be responsible for our own finances, we think, yo, the job is the best place for us. They gonna look out for me. No, they ain't. So when you talk about me telling people, man, you can invest better than your 401k, they gonna defend that. No, I match that. They match me. Well, go look at the 11 or 17 cents of fees they got in there, right? Go ask the person who retired at 65 from the 401k, and the money they thought they had is 1/3 less. Go ask that person that, but now it's too late. What they gonna do now? And there's nothing against it, but now they working part-time jobs.
Oh yeah, so I absolutely agree with Trap's assessment. Now here's one other thing that investors may or may not have considered. Now, whether or not you profit or lose money in the market, your financial advisor still gets paid. Now, I don't know how many people even thought about that, but that's the way that goes. So now we get into the alternative. And the alternative is a Roth IRA. And some good things about that are, as you contribute to a Roth IRA, your dollars go in as pre-tax, so that once you become 59 and a half years of age and have the account funded for 5 years, you can withdraw those funds tax-free. Now, the setback to that is you may have to do some research on individual stocks if that's the route you want to go. Now, I'm no financial advisor or anything like that. I'm just somebody that trades and invests in the open market. But hopefully this info will shorten your learning curve. Now, one of the things you can do, or several things you can do as far as investing in your Roth IRA, is make it kind of short and sweet. You can invest in what are called ETFs, which stands for exchange traded funds, and or index funds, until you familiarize yourself more with the market. So if you're interested in investing in a Roth IRA, there's several brokerage firms that can help you with that. One being Vanguard, another being Charles Schwab, and another one Fidelity. Oh, and soon enough, I'll be dropping an ebook called Beginner's Guide to Stock Market Investing. Feel free to pick that up when I drop it. So if you're ready to start your stock market investing journey, feel free to go to the Stan Store URL, and there you can go to Robinhood, Webull, or Moomoo, and get yourself some free stocks and get started. All right, till next video, peace.